And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning. Welcome to the show. Of course, it is the Hump Day edition of The Real Investment Show. Danny Ratliff joining me this morning to talk a little bit about, well, everything financially related. So we've got a lot of topics to get into this morning. A couple of big pieces of news, of course, out overnight as the U.S. is talking about, and interestingly enough, right? The U.S. is talking about now sanctioning oil in Russia. And of course, we've got to now cut a deal with, another dictator down in Venezuela to get oil into the U.S. We need to replace about 3 million barrels a day. That's what we import currently from Russia. Now, 2 years ago, we were exporting oil. And so this is, really kind of the change of the environment ever since we started this kind of new woke movement in the country to get rid of that bad oil and gas drilling. Well, now this is why you be careful about, crimping your own supply of stuff. And this is a problem. And this is going to potentially lead, again, analysts right now are forecasting as much as $150 to $300 a barrel in oil. Now, we're never going to get there. And as we see this is always the case, right? We always have these very huge economic numbers coming out. It's like, we're going to go to $300, a doom and gloom, right? This is just to get you to, click the article, read the headlines, etc. And as we talked about on Monday, make sure that you keep perspective in place, particularly when you have a lot of these headlines just kind of flying around everywhere. We have lived through this now for over 2 years, one headline to the next, right? It's just been for a year and a half. It was all about COVID every day on the media, every single day. The number of deaths, we were tracking it person by person. And, we got ourselves wrapped up in this whole big wad of fear that kept us from doing things that that creates economic activity, right? And so we impaired the economy by our own actions because we were led into by fear. Now, and ever since now, we've had this war in the Ukraine going on, not nary a one headline on COVID as of lately. COVID has now magically disappeared, that we have this war going on in Russia. But again, one fear headline to the next to get you to act in a certain manner. And this is what's happening here, right? And so we're getting wrapped up in fear. Now, oil prices at the pump oil prices are going up, gas prices are going up at the pump. Absolutely, that's an inflationary problem. We have solutions for this, but it'll take time to get drilling up. And look, oil and gas drillers in the U.S. will respond to high prices. High prices will drag out more CapEx, more investment, etc. The rig counts are going up. We are seeing that activity. So supply will come online. It's just a function of time. And importantly, here we have this news yesterday, and this is always the case, right? I had a lot of people email me yesterday going, I've got to go out and buy, I'm going to go buy, oil futures. I'm going to, put money in energy stocks yesterday because of this announcement. Because if we ban Russia and Russia flies, boy, oil prices go through the roof. Well, interestingly enough, oil prices are down this morning by a couple of percent. Now, why is that? We just put a ban on Russian oil. It's always kind of buy the rumor, sell the news in the markets. That's the way things work. People run into these things. And remember that oil prices in particular are all about speculation. Oil prices, as you see them reflected from one day to the next, is all about speculation. It has really very little to do with supply and demand. It is a very large chunk of Wall Street trading futures on oil prices and making these bets based on economic events, geopolitical events, etc. That's what moves oil prices. So again, a lot of the run up in oil prices was in anticipation of sanctions being put on Russia. Now that that's occurred, that's now being reversed here. So again, look, that doesn't mean oil prices are about to go straight down again, but as we showed yesterday, in particular, oil prices had already gotten very extended, yesterday, and we were talking about this, and actual oil prices sold off yesterday as well. But oil prices were more than 3 standard deviations above their long-term means. That's unsustainable long-term. Prices had just gotten well ahead of even what reality is based on current supply and demand. Oil prices had just surged that far. So again, not surprising you're going to see a correction here in oil prices. You're going to see a correction in commodity prices really across the board, gold, silver, all these other things. You're going to eventually see a correction and a potential correction of magnitude because of the recent run-up, even in things like gold. Gold has had a very big run-up here over the last few days. And again, selling off a bit yesterday after getting more than 3 standard deviations above long-term means. Again, exactly the same situation. Gold driven by speculation more than supply and demand. So the point here is simply this, is that headlines are headlines are headlines, but make sure that you're not kind of jumping from the frying pan into the fire by making bad decisions based upon headlines and emotional trading. That's why we always talk about keeping your trading discipline in place, keeping your perspective in place, and not allowing emotions. But look, I'm emotional just like everybody else, right? I get emotionally stressed out over our clients' portfolios. It's their money is very important to me. So I have emotional biases as well, but it's very difficult sometimes to keep those emotions in check and not go chasing off after some asset because it's running up. Because generally by the time that you recognize the run up, it's too late to chase it. You've already missed the move. And that could and this is why this leads investors to more often than not buying exuberance and selling panic, which is exactly the opposite of what they should be doing, as is generally always the case. So a couple of things, though, we did talk about earlier this week. Again, these headlines, what's happening in Ukraine, they're important, not dismissing those at all. But what's also important here is what's happening economically in the U.S. The National Federation of Independent Business yesterday, now this is the organization that represents small businesses all around the country. Small businesses make up more than 50% of the employment of the country, so very crucially important to overall economic activity. And we talked about yesterday that because of all this stuff that's going on, the NFIB was expectations were that there was going to be an uptick in small business confidence. As we said yesterday, that was not likely the case. Of course, that was what was the case. We saw small business confidence decline yesterday. But importantly, we also saw some declines in some very important areas of the survey. Wages declined. Expectations of paying higher wages declined. Expectations of selling, right? This was the most interesting thing because we've talked about this lack of liquidity, the reversal of liquidity in the markets after we gave businesses or individuals all this money to go buy stuff in 2020, 2021. That's now gone. Expectations of sales for small businesses are now back into or near recessionary territory. So everything that you would expect to be happening and what we're seeing economically now is now starting to suggest, and small businesses are suggesting that we are likely headed to a recession within the next 12 months. And that's honestly what you would expect from what's happening between headlines in the Ukraine and Russia, 2 years of COVID lockdowns, all these type of things. That's impaired economic psychology. And now that the liquidity support has been removed from the markets, all this is starting to reverse at a time where you have these very large rates of inflationary pressures occurring across oil, gas, food, everything else that impacts the household bottom line. Not surprisingly, that consumer confidence, consumer spending, and consumer attitudes really starting to slow down here. We'll be right back after the break. Lots of stuff to get into this morning with Danny Ratliff as well. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
FAFSA. It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next Lunch and Learn on college planning and dealing with FAFSA season. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. realinvestmentadvice.com. Click on the insurance tab.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show this morning. I'm Real Science Roberts. Danny Ratliff joining me as well as we kind of get into this Wednesday edition. Lots of stuff going on. As we were talking about in the beginning segment here, just a tremendous amount of headlines right now. And again, you've got to be careful from the standpoint of investing not to allow headlines to drive your investment decisions. And look, we're all emotional, right? We all make those decisions. We all have emotions that drive our practices, but we've got to try to set some of these things aside and just get to the rationality of what is actually happening. And look, there's not a lot of good stuff happening right now, it's certainly easy to get wrapped up in all the news, right? I mean, there's inflation, there's what's happening with the war in Russia. Like I said, good news is not a word on COVID as of late. All that has gone away. I haven't heard Dr. Fauci on the media. He has lost his media
He's
stance
lost
here.
in space.
Yeah.
What a breath of fresh air.
So, it's good, right? So there's a positive news. But again, it's just important not to, it's fear is what drives headlines. Fear is what drives clicks and all this type of stuff. So just try to keep this in perspective. And then this is what we talked about on Monday. I'm writing an article about it for next Tuesday as well. Just, about looking at markets and keeping perspective, because this is where we tend to make mistakes. Again, as I said, I got lots of emails yesterday. He's like, want to buy oil? I'm buying oil. We're about to put sanctions on Russia, right? Oil prices are down today. It's like, what? That's what happens. Markets tend to do exactly what you don't expect them to do, and they have a really good tendency to suck you in right at the peak of something. Markets are really good at that, and so now this is what we've got to deal with. But the next thing that's coming up is next week. We've got the Federal Reserve, and I've been having an argument with Michael Leibowitz all week. He's convinced that the Fed is going to hike rates, be super hawkish because they don't have a choice. And, and my argument with him is I think there's a real possibility that they back off entirely because of what's happening here, because particularly with markets down, right? Ever since Barack Obama was president, the presidents have now utilized the stock market as a measure of their policy success, right? So the entire presidency of Barack Obama, the entire presidency of Donald Trump has been, look at what the stock market's doing. That means I'm doing a good job. And reality is look at what the stock market's doing. That means Janet Yellen, Ben Bernanke, and Jerome Powell are doing a good job with quantitative easing because that's what was driving stock prices. But forget the polls, right? Forget the presidential approval ratings right now. Look at the stock market. That's the real measure of approval. So I am sure, and I shouldn't say I'm sure because I'm never sure about anything, but I'm pretty confident that Jerome Powell's been getting some taps on the shoulder from the White House saying, yeah, we need to make sure the stock market hangs in there. And, we'll see. This is next Wednesday, but this is kind of the over-under bet with me and Michael Leibowitz right now. He's suggesting that the Fed's going to remain aggressive. I'm saying they're going to lean a lot more dovish potentially at this next meeting, mentioning geopolitics in particular as a risk. And they've already done this. Jerome Powell recently gave testimony in front of Congress and Senate, and front and foremost in his testimony was the focus on geopolitical risk. And so we very well likely see that show up in the meeting minutes or in the actual press conference after the meeting next week.
Is there a bet riding on this with you and Michael?
Not yet. We'll probably put one on next week. So
you think they're going to be more dovish but still hike?
No, there's a real possibility they should hike. They should have been hiking all of last year, right? But because of what's going on, where markets are, there's a potential that the Fed comes up with I think they're going to hike a quarter point. I almost think they have to, but with a lot of really dovish language, like we're going to hike a quarter point, but then we're going to wait and see how things kind of shake out over the next, couple of months before we make our next decision. Something like that. In other words, just a kind of a pullback of some of the more hawkish language. Again, rate hikes are expected to go up by 7 times this year. And Goldman Sachs, Morgan Stanley, others, we're going to have 7 rate hikes this year. I don't think we get there. But the biggest problem for the Fed is being trapped at 0 and you have a recession. And there's plenty of evidence right now that within the next 12 months, again, National Federation of Independent Survey yesterday is trading in recessionary territory. ISM manufacturing indexes, production indexes, those are all starting to roll over here. There's a lot of things that suggest that within 9 to 12 months, we could be on the cusp of a recession if things don't, and again, as always, if things remain status quo. That means, this war in Ukraine continues, oil prices remain high, all these type of things. That is going to start to push the economy towards a recession in the next 9 to 12 months. Now, if things change, that's going to change things.
Now, couldn't you make that argument as well that because of all this new inflationary pressure on top of everything that we've already seen, that they could go ahead and be more hawkish?
That's Mike's argument.
Yeah.
The argument is that, or I shouldn't say the argument. It's not really an argument. The debate between me and Mike is the Fed will sacrifice the stock market to battle inflation. My argument is I think they will sacrifice the American public to save the stock market for White House politics. We'll see.
Yeah, but the American public's going to be more thrown in the fire here versus
they really don't care. If the White House and Powell cared about the American public, you wouldn't have fueled a 350% rise in the stock market since 2009 that only benefited the top 10% of income earners.
It's true,
right? So, it's easy to say that, oh yeah, they've got the best intentions of the population, but their actions don't actually support that.
Yeah, that's very true. But couldn't you see them falling on that financial stability after they fight inflation?
The question is that you can't do both, right?
Well, I know, but you can go after one.
If you go after inflation, you're going to have massive financial instability at some point. You're going to create a credit issue.
Which always happens.
And then you've got to say, well, I'm not going to bail out the banks again.
Yeah.
And that's never going to happen. Because who owns the Fed?
The banks.
The banks. So, again, this is...
What a twisted circle here, right?
Well, this is my whole point. This is my argument. And look, I hope I'm wrong, right? I really honestly hope I'm wrong in that they go after inflation because that's what really impacts the bottom 80% of Americans, and particularly the bottom 30% of income earners. They are the most impacted by inflation. They don't pay taxes. They actually get money back in terms of taxes, but they pay tax heavily because about 90% of their income goes to just paying for the cost of living. And they are inflation is a huge tax on them. So personally, I hope the Fed goes after inflation and sacrifices the stock market, because we can short the market, right? We can make money in the markets when the markets are going down. That I'm not worried about. But unfortunately, history suggests that they will focus on financial stability and the wealthy more than the bottom 80%.
It makes sense.
That's just what history says.
Yeah, no, you're right. We'll see how it plays out.
Yeah. So anyway, how are you this morning, Danny?
I'm doing well.
You walked into that one, didn't you?
I did. It's okay.
So,
but that's a good thing, because this is what's on top of everybody's mind, right? Everybody's extremely concerned with what you just mentioned, the headline news, what the Fed's going to do here shortly. And I think this is something that, it needs to be, we need to visit about this on a regular basis, because these are the questions that I get,
right?
Day in and day out, which I'm sure you're, like you mentioned, all the emails you're getting, you're right there too.
Right. Well, and again, this is, it's interesting because, I get emails from people that have really well thought out aspects, right? That it's like, this is going to happen and this is going to happen, so I'm going to invest this way. The problem is you're too late. That the move has already happened in a lot of these areas. So it's just like nickel won't open for trading until Friday right now. So if you were trying to buy nickel, or if you had bought nickel, you can't sell it. You're stuck until Friday, and on Friday nickel could open down 50%, right? And you have no ability to trade this. And this is the problem with some of these things. And that, by the way, that brings up another aspect here real quick. Gold, silver, in particular silver. But a lot of these commodity markets are heavily manipulated, especially the silver market. Silver is one of the most heavily manipulated markets in the world. And there is a lot of insider manipulation that happens on those markets and exchanges. So you've also got to be very careful about trading a lot of these markets that you think are just simple assets, but there's a lot of manipulation that goes on, particularly in the gold and silver markets. And so that's also something you just have to be aware of. But as we start to look forward here, the next things that are going to start to happen, the Federal Reserve is going to be the next big hurdle next week for the markets. At the same time, we've got this whole issue with Russia, Ukraine, oil prices, sanctions, all this type of stuff, weighing and creating more inflationary pressures on the market. And this is why it's a very challenging position. And Mike and I will have a lot more detailed conversation on this tomorrow. But this is a very tough position for the Federal Reserve to be in, because, again, they do have to make a choice. What's happening with the SWIFT market system, what's happening with interest rates, what's happening with with inflationary pressures, those all can create financial instability, and that's the biggest risk and the biggest worry of the Fed. And I'm not sure they've got an easy answer at this point. And it's almost one of those tightropes where any step in the wrong direction is going to have a much more exacerbated consequence than we would in a more normal environment. Be right back after the break.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
FAFSA. It's It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next Lunch and Learn on college planning and dealing with FAFSA season. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. realinvestmentadvice.com. Click on the insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
When I was in college, there was a car called the Yugo, made out of Yugoslavia.
Yes.
You remember this?
Yes,
right?
yes.
This car was so bad, it actually came with a cassette tape that you put in and it went vroom.
The Real Investment Show podcast. Same show, your schedule.
I've got the Fred Flintstone brakes.
At realinvestmentadvice.com.
But that's kind of the way you're driving a Yugo this morning.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Well, just when you thought that, all of our congressmen and lobbyists were tied up with what's happening in Ukraine and trying to restart oil and gas production. Nope. They're still working on trying to mess up your retirement plans. I jest, of course. Headline this morning, lobbyists expect major retirement legislation to pass in 2022, and there's a push from the leadership in the House and the Senate to get the Secure Act 2.0 passed this year. Is that a good thing or a bad thing?
I think there's some good aspects of it and some maybe some not so great. And really probably indifferential in some ways because people need their money. And so they've tried to get these bills passed. And just to give you an idea, the House Ways and Means Committee has actually, they passed many bills last year. Just nobody else passed them. They could never get them to the floor. And so this was the problem, is that they had so many different things that they were trying to do all at once. And so they'd have one little bill here, one here. So this year, the word on the street is that they're going to combine all these different bills and attach them. And this is a legacy thing. So if you look at Rep. Kevin Brady, Richard Neal, they're both going to be out. Kevin Brady used to be the head of the House or the chairman of the House Ways and Means Committee. Now Richard Neal is out of Massachusetts. And this is a big deal for them because they've been trying to get some of these bigger portions of this legislation for quite some time. And they've had a very difficult time doing so. Having some bipartisan support here, I think, is promising that they will get something done. The big thing, and so if you remember, they've done the CARES Act, they did Secure Act. The Secure Act, the big thing that they hung their hat on with this one was they moved RMD, required minimum distribution age. So for those of you who have 401ks, IRAs, retirement plans, you have to start taking distributions, or used to at 70 and a half. They moved that number to 72. Now their big push is 75. But Lance, if we keep this inflation pressure up, I mean, who's going to be able to wait till 75?
Well, this is the other problem.
Yeah.
Right. And again, all these bills, we keep messing around the edges, right? We're, let's move this to 75. Let's, trim this back over here. Look, this is really easy. You just need people to save for retirement. That's it. I mean, if we take a look at the statistics, it's always very interesting to me. They go, well, everybody contributes to a 401k plan. Well, no, not really. If you actually look at the statistics, only about 50% of employees in the country actually have access to a 401k plan. Of those 50%, only about 50%, that's 25% of all your employees actually contribute to the 401k plan. A lot of people have a 401k plan. They don't contribute to it. Why? Because they can't afford to. They're just trying to make ends meet at home, right? They can't afford to put money in a 401k plan. And this is what always gets me about, CNBC and these CNBC has this joint venture with Acorns. And they have all these videos they put up there. It's like, if you're 25 and just save 10% of your salary for the rest of your entire life until you're 70, you'll have $1 million in the bank. That's awesome.
If you never lose money and you make 50 grand every year and
and no surges in inflation,
Yep.
right? Yeah, you'll have $1 million. What they forget to tell you is that $1 million 50 years from now isn't worth $1 million anymore because of inflation, right? You're going to need 2 million, 3. I've got an article coming out on this here shortly, right? Because they fired me up the other day on this. But the bottom line is, look, we just need people to save more money. So here's a real simple bill to pass that could help alleviate pressure on Social Security, which is grossly underfunded. Remove the limits on retirement saving. Why am I limited to $5,000 or $6,000 a year in a Roth IRA? Why can't I put in 10? Why can't I put in 4? Why can't I put in 12? Whatever I can afford to save for my retirement. Why is there a limit on this? Remove the limits on 401k plans. If I want to put 100% of my paycheck into my 401k plan and I want to eat beans and rice at home, that should be my choice, right? Why am I limited?
Well, and the issue is, I think the problem still lies with most people don't have access or can't fund. So another bill they proposed was actually going out and saying all employees need to have a mandatory retirement plan.
And you know what? This was called a pension.
Yeah,
that we had back in the day.
A couple of you may still have those. Yeah, and so there's so many different issues to this. Is that you can raise those, but then we're going to have the same problem of why they're going after Roth IRAs with Peter Thiel, because one guy in this whole world, utilized in such a way that just he made billions of dollars.
Right.
That he's the exception to the rule. That's not what most people have.
Right. And look, if you could get rid of 401k plans entirely, you won't, because there's a huge industry in it.
Yep.
But literally, you don't need 401k plans. Everybody could just have an IRA with no limit on it. So whatever you put in, you deduct off your taxes, and you save money for retirement.
Well, the 401k plans are nice, though, because you do get the employer contribution, so it helps you super fund that to some extent.
Sure.
And so I think that'd be tough to go away from, but having the ability to do that, not have those contribution limits, and then go and fund an IRA.
Well, there's another one, right? Why am I capped between, if I contribute fully to my 401k plan, why can't I also put money into an IRA?
Yeah,
right.
That's right.
Again, why am I limiting savings? The point here, right? We can go through this maturation. It's really easy to solve these problems, but why am I limiting people to save for their retirement? Period.
It's easy if the government can handle actually balancing a budget. I mean, that's the problem, right? So they need your money. That's why they say, well, you can only put so much, because we have these people who, and here's the funny part about this, is that who's going to be impacted the most if they keep putting more money in, right? The high wage earners, because those are the guys that can afford to do so. But, I thought they didn't pay their fair share of taxes.
Right.
So why are they limiting them? Because they want them to pay their fair share of taxes.
Sure. No. I know the answers to this. But my point, my point is simply this, is that we need to get more people saving for the retirement, because Social Security can't afford it. And it is simply a function that is just math, right? It's demographics. You've got baby boomers moving to retirement. They're all starting to draw Social Security. You've got, back in 1940, you had 16 people paying in for every one worker drawing out. Today, it's less than 2 people paying in. The math just doesn't work, right? So this is why, you've got a huge underfunding problem. And again, we also have continued to expand what Social Security will pay for. Originally it was just for workers, and then we've expanded it to widows, orphans, children, immigrants, everybody else. Anything that we could figure out we wanted to pay for somebody for, we threw that into Social Security. So now you have all this excess draw on a very limited pool of money with even a smaller income flow coming in every year because of demographics. It's just it's an insolvable problem. So the only thing that you can do to help ensure people's retirement, so they're not greeters at Walmart for the rest of their life, is to let them save more for retirement.
Well, that's right.
And give them an incentive to do so.
So you're going to love this. So another proposal that they have is actually to put guaranteed income annuities within 401ks, which very similar in many ways to the pensions, right?
Right.
So you have the defined benefit plan, which those are employer funded. So that's a really nice benefit. Whereas they've passed the buck on to you now with the defined contribution plan, because you have to make those contributions, you have to manage the risk, and they don't have to worry about it any longer. But now they're going to put something in here that's going to allow you to basically do almost a similar thing as what you would have done previously with that pension plan, is actually give you the ability to create your own pension inside the 401k.
Again, that was the biggest mistake we ever made was 401k plans. And as soon as corporations figured out they could shove off the entire liability of the pension plan onto the employee, that was a huge profit for corporations. But there was a day where corporations actually cared for their employees and ensured that they had a retirement. So we've done everything we can to kill retirement security for a vast chunk of Americans today, and it's unfortunate. And the problem is that with 401k plans, there's a reason that a lot of businesses don't have 401k plans. They're expensive, they're confusing, they're complicated to operate. And, in order to get, under what they call safe harbor, I've got to make a contribution to the plan, and I don't necessarily have the profit margin to do that. So I just won't offer them. But this is where we go back to, there needs to be a very simple process to allow businesses to offer plans to their employees at some little or no cost to the actual company itself. If your goal is to stay away from pensions, have a no-cost option to allow your employees to save money out of their paycheck.
And, I think that most of these proposals and things that have been done actually have made a lot of these things easier. They've been more efficient. They've done multiple employer plans. I mean, that's why we have somebody strictly here at RIA who does nothing but retirement benefits. That's it. And so I think that this is a big industry, and there's a big area where, we found that, hey, there's a better way to do a lot of these things, and have somebody who's held captive to one place that can only do this, where you can have somebody go out and shop and find the best of the best. But, it's interesting. So you mentioned, when 401ks were created. So back in 1978, Ted Benna, basically, he created 401ks strictly for the purpose of a loophole. It was a loophole in the tax code, and it was to help other people save additional funds. And he said,
top of their pension.
On top of the pension. He said it was the worst thing he's ever done.
Yeah.
Was creating this. Because exposing that loophole gave all these employers a way out. And then now it's put the burden on everybody else, on you and I.
Well, and again, I've got another article I'm writing right now. After three if you go back to 1980, we've had the 3 biggest bull markets in history, and 80% of Americans don't have $500 in the bank. That just goes to tell you that investing doesn't really work the way they tell you on television. Just stick your money in, it'll go up over time, and it's all great. If it did, you wouldn't have 80% of Americans with less than $500 in the bank.
Yeah, but that goes back to just bad habits, I think.
I'm not saying that, but also 2 big bear markets in between wiped out a whole lot of wealth, and then people do exactly the opposite of what they should do. Instead of putting money in at the bottom, oh, by the way, because they didn't have any savings to add at the bottom, they sold at the bottom and then didn't come back in for
Hey, man, we got a stimulus
years.
check. I mean, we're going to be rich. No? Is that how this works?
Yeah. Mr. Optimism over here, Danny Ratliff, joining us this morning.
They're not going to keep giving those? You just put it in the market, close your eyes?
Yes, actually, no, we are going to keep getting stimulus checks. And we'll talk about why that is going to happen right after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next Lunch and Learn on college planning and dealing with FAFSA season. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. realinvestmentadvice.com. Click on the insurance tab.
What worries you about your money? Enhance your financial success with RIA Advisor's free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show this morning. So just for the break, just talking a little bit about, retirement savings. And, the problem is that it's not that people don't want to save for retirement. The thing that really kind of, bugs me a bit is these kind of armchair articles that are out there that just like, oh, if you just save, $25 a day or whatever it is, you'll have X amount of dollars. And again, it all sounds great. It requires you to get 6% annually every year, no changes to inflation, no, recessions, no market downturns, those type of things. And that's why, when you go back and look at reality of statistics, and yes, part of it is, to Danny's point, exactly, is that Americans have very bad financial habits. We don't teach good financial habits. We don't teach, it's interesting. My wife and I had this conversation is that, when we were going through school, we were talking to our kids about this because all of our kids just, type with like two fingers. They're very fast, right? But they type with like two fingers. And my wife and I were talking about is that, when I was in high school, my mom required me to go take a typing class, which was the best thing she ever did, because I know how to type. And, we taught our parents taught kids, back then, important skills, how to balance a checkbook, why you don't use credit card debt, these type of things. And we don't teach kids that. And Danny had a good conversation about this the other day, talking about, going to the arcade with his kids and, going to give them a bunch of quarters so they see when they run out of quarters, but nobody takes quarters anymore. So,
it's criminal.
It's just, you slide a card and it's not, and this is the problem with debit cards, right? And it irritates my daughter when we go places. I still pay cash for stuff for the simple reason that it reminds me, when I run out of cash, I've got to go down to the bank. I've got to get more cash. So it slows my roll, so to speak, on spending money. And my daughter, it just irritates her because it takes so long. People trying to figure out how to make change and stuff, which is also another entirely fun thing to watch, is to go to a store and watch people make change. They have no idea how to
Everybody's
do this.
behind him at the grocery store. Come on, boomer.
I know, right. But I'm trying to teach my kids lessons, but it doesn't sink in. They're like, Dad, just use a credit card, right? But and despite the fact I'm trying to teach them good lessons, it's society advertising, everything you see on television, right? Just put it on your credit card. It'll be fine. And by the way, put it on your credit card. We're going to give you points. They don't tell you about all the other crap that goes along with the points, so called interest at 20%.
Well, that's the thing, too, is like you can use a lot of these things to your advantage, like those points, but you have to pay it off each and every month. So then you get to just describe a whole nother equation, with the kids of like, okay, well, here's how you would do this, which right now, for mine, they have no idea. They still don't understand that. Like I think I told you they were looking at play sets one time, and, the little guy said, hey, we're the guys. What guys? The guys with the truck. What truck? Well, with my play set. I'm like, wait a second. We looked at it out online.
Right.
He did it again the other day with Legos. I'm like, no, that's not how this works.
Right.
Best thing talking about typing, my middle one, a couple days ago, actually, I was typing, doing something. He's like, man, you could do that fast. He's like, but how come the alphabet's all screwed up on there? I said, man, that's a good point, buddy. So we'll talk about that someday.
Yeah, exactly. But where we left off, and the point about the small segue is that we left off talking about stimulus checks. And, unfortunately, we have also taught bad financial habits to Washington now. And, while Americans have terrible financial habits, they don't save money. They live well beyond their means. In fact, I run a piece of analysis called the spending gap. Prior to 1990, income and savings supported the cost of living. In other words, you could actually, out of your income and what you had in savings, you could pay for your cost of living on an inflation-adjusted basis. Beginning in 1990, it then required debt in addition to your income and savings to pay for that standard of living. Today, there's about a $16,000 annual gap between income and wages and savings and your cost of living. And a big chunk of that has to go on to debt every year. So people are just compounding debt every single year to keep up with just the cost of living. And this is why we have record credit card debt, why we have record debt, for consumers, period, because of that inability to keep our lifestyle within the confines of our income. But this has also become a problem in Washington, and the unfortunate lesson that we taught politicians in 2020 was that giving out free money was good for them politically. So to your point, Danny, is that, stimulus checks may be gone for the moment, but you can almost guarantee that in the next economic downturn, the first thing that politicians are going to resort to is sending out checks to households again, because they got a lot of political benefit from that. It was terrible for the economy. It created this inflationary surge. Well, but politically, it was good for them in the short run.
Hey, midterms are coming up.
Yep.
My bet is that they're going to fight inflation with more checks. And so they're going to fight inflation with more inflation, essentially.
Correct. I don't know if they'll get that done before midterms, though.
Wouldn't surprise me if they tried.
No, it won't surprise me if they tried. But Build Back Better seems to have died its eventual death.
Yeah.
So and that was actually a good thing, because that would have created a lot more inflation. I don't know if there's enough political goodwill at this point to do another round of stimulus checks unless the economy is in tough position.
We had this inflation problem prior to this war overseas that was created partly because of these checks.
Yeah.
And it wouldn't surprise me to see them do it again.
I'm not arguing with you.
Yeah.
It's they're coming. It's a question of what triggers it, right?
Correct.
Do you need an economic downturn? Do you need financial instability? Do you need what do you need? But there's some trigger point here that the first thing politicians will go back to is what seemed to have worked previously. And what seemed to have worked previously is giving people money, even though they will completely forget about the part that it causes inflation. A lot of it. Because as we talked about on Monday, and we have an article on the website right now about inflation and saying, no corporations they're not greedy corporations are not creating inflation. It's simply that inflation is always and everywhere a monetary phenomenon, and the only people that can print money is Washington, D.C.
That's right. So how long can this inflation last?
High prices are a cure for high prices, my friend.
But, so we had high prices already, right? We had corporations coming out and their forward guidance talking about, hey, we've raised prices so many times this year. We don't feel like we're going to be able to continue to pass that on.
Well, they can't already.
To the consumer. So what happens now, though? So, you start looking across the globe. Commodity prices are through the roof. Mm-hmm. I was reading some articles about just all of the ships or barges that are stuck in the Black Sea. They can't, you get 30% of the world's grain and wheat from Russia and Ukraine. You also get about 16% of all of the corn, which I didn't know that, from Ukraine. And we're not getting that anywhere. That's just a small portion of bigger picture here.
Right. No, Ukraine is one of the, Ukraine, Russia, et cetera, they're kind of the breadbasket of Europe. So, there's a lot of commodities that come from those two countries that are getting impacted. Look, inflation will cure itself because when you get into a recession, what is inflation? It's too much demand and too little supply, right? That is all inflation is. Eventually, two things happen. One, demand falls. Two, supply rises. Even if supply remains the same and demand falls, prices will come down. But supply will rise. We will eventually get past whatever this is. Either we'll oil producers will start producing more oil in the U.S. There was a very interesting debate between a reporter and Jen Psaki yesterday at the White House, and she was trying to defend the fact that the rise in oil prices has only been a function of the Russian invasion of Ukraine, right? Which is obviously not the case. Oil prices
they're going up way before then.
Yeah, they were going up way before then. But the point is that at some point, high prices will draw in more supply. Producers are going to produce.
They'll be more inclined.
Exactly. So as supply rises and as demand falls, inflation will fall. And in fact, probably by this time next year, we're going to be having this conversation on the show talking about when is disinflation going to stop disinflating.
So to speak to that just a tad bit. So disinflation versus deflation, right? So disinflation is a little bit different than deflation because it means you still have inflation, but it's just lower than what it was. Yeah.
Right. So basically, it's you have inflation, right? Prices are going up. Then you have prices declining. So that's disinflation. Yep. So inflation's coming down, but it's still positive inflation. Negative inflation is deflation, right? So when you actually have negative year-over-year changes, that's where you start having deflation. And that will occur also. As we get into 2023, we will probably be talking about deflation here on the show. We'll be talking about interest rates back below 1% and those type of things. That's coming, and that'll be coincident with a recession whenever that sets in. Again, timing of all this is very negligible because things change. We have a very fluid environment. Changes to what's happening in Russia, change to Fed policy, change to political policy can contract or expand the time frame to these next economic events, but they are coming, and they're almost kind of baked into the deck right now that it will happen unless something dramatically changes. But this is why, as we've talked about before, making a one-sided bet on something is generally not a good way to go because things do change and they have a really bad habit of changing exactly when you make your investment in the other direction.
Just like these headlines, just like day-to-day markets right now.
Mm-hmm. One day the next.
Yeah.
Sold out yesterday thinking markets were going lower over sanctions. Yeah, you'd be wrong. Market's up 500 points this morning on the Dow. That's the whole point. Makes no sense whatsoever, but this is the environment we're in. All right, that wraps up the show for today. Danny, thanks so much for joining as always. Michael Leibowitz here tomorrow. We'll be talking about our bet on the Fed because that meeting is coming up next week. Be sure and get by the website in the meantime, realinvestmentadvice.com. Mike's latest article is out this morning talking about gas prices and economic recessions. That's on the website now. While you're there, send us your questions, comments, emails. Been getting a lot of emails, a lot of comments lately. Glad to answer them. Send them on our way. realinvestmentadvice.com. See you back here tomorrow. It's a rich man's world. It's a rich man's world.